Sperling is counselor to Secretary Geithner and joins us from the Treasury for more on the department's plans. Gene, thanks for joining us.
Thanks for having us.
Let me first ask you. It seems like all of a sudden there's a lot of momentum for this. We have heard talk about small businesses needing loans for a long time, and obviously the labor picture has been bad for a while. But all of a sudden there's a giant jobs fair planned in January. You have Tim Geithner sort of asking banks to please seriously come out and start lending. I mean, what are the specifics that you really can tell us about that are going to get these wheels turning again?
Well, there's been a focus on small business from the beginning, but there's no question that as you've seen some of the financial stability return, as you've seen some of the credit conditions improve for larger businesses, they're not improving as quickly for small businesses, and we know it hurts them more. We know that larger businesses rely on banks for 30% of their financing. They have alternatives, private investment, the corporate bond issuance. Small businesses don't. So if banks are being too restrictive, too risk adverse, it's small business that gets hurt the most. And we're seeing this in the numbers right now.
Well, and banks that really should be in our pocket, right? We've given these banks tens of millions, hundreds of billions of dollars. Sorry, hundreds of billions. Can't we do more than just say, please lend to small businesses?
Well, you know, I mean, the Secretary was pretty clear on this. You know, it was very clear that people that were given assistance, it wasn't to help a particular bank, it wasn't to help any particular executives, it was done to help recovery. So those who were beneficiaries of this extraordinary action from taxpayers on the behalf of recovery can't now kind of go into a hoarding, overly risk-averse pattern when we know that if everyone does that, it's going to pull back on small business creation and job growth. And let me just say one important point. In the last recession, small businesses took less of a hit, job-wise, but actually led out of the recession. Now they've taken a deeper hit, and we're seeing small business job creation coming back slower. So this is a very big issue for the macroeconomy.
Absolutely. It's a huge issue. As you said, a deeper hit for those small businesses, and jobs are coming back very slowly to that area. So, Gene, help me out here. I mean, when are these programs going to start? How much are we talking about? And if you can
what are the programs? What are they?
Well, so what we started in the Recovery Act was we increased through the SBA, you know, higher guarantees. This is important because to the degree banks are not lending because they think the real estate collateral has deteriorated, higher guarantee make them take a risk on an otherwise creditworthy small business. We've come forward with a more preferable capital to smaller banks who will have a small business lending plan.
So wait,
we've done things on the liquidity side.
How much are you talking? As you said, this is a very, very struggling sector. They want to know how much money is coming to them and how quickly.
Well, you know, Senator Warner came today and talked about putting $30–40 billion in a loan in a facility, a small business lending facility. We are looking at pretty significant ideas. I'm not going to get into the amount. The key is, and I'll just be very straightforward, it's making sure it is workable. In other words, people want TARP funds to be going to small business, but people don't want to be a TARP recipient. We need to figure out how we can use those funds in a way that helps small businesses, but doesn't in any way stigmatize the banks who are participating in what we think is an important thing for economic recovery. It's not a bailout if they participate in a program like that. They're participating, helping getting small business lending going. That gets into the details of working through the legislation. We're trying very hard to do that right now.
I wonder, are we talking significant like AIG significant, or are we talking significant like Goldman Sachs small business program significant? I mean, 500 million or 183 billion?
You know, I can answer that very precisely, somewhere in between that.
That's good. So more than 500 million is a good answer, I guess.
No, we're definitely talking in the billions, but really the point I say is a very important one. Banks want to, I think banks want to participate. What we're hearing, what they've told Herb Allison, who runs our TARP program, is, you know, there's a layer of loans you want to do, there's a layer of loans you don't, and there are some in the middle. With a little bit more help, a little bit more assurance, you know, that you could have a little bit of assistance in sharing the risk, it could help. You want to go after that amount, but you have to have a program that people are willing to take, and they won't feel stigmatized by taking, and that's what we're working through the details on.
Gene, we got to run. Thank you so much. Gene Sperling, counselor to
so
Treasury Secretary Timothy Geithner.